Everybody, welcome back to my channel. I hope you're enjoying the content, and today's video is going to be off the chain. Now, this tip that I'm going to share with you right now is probably the last video you're going to need to watch from me. So I hope you enjoy it, and until next time, take care. Only joking. Listen, this is a shared secret. Not many people know about it and know how to really identify market structure and understand market behavior. What I'm going to do today is just give you a tip that's going to really help solidify and find those strong key areas in the market, understanding the data that's put in front of you. Now, what we're going to look at today is 3 examples, and these are going to be the examples. We're going to look at a double bottom where this strategy works. We're going to look at a double top where this strategy doesn't work. And then we're going to look at a level in the market where price is reacting to, and we can identify those key reversal areas so we can get into the market as soon as possible. So let's get started. The first market structure we're looking at is structure to the upside, double top area in the market, reversal, strong push face to the downside, exhaustion, key level reaction. So we're expecting the market to go down at this point. Now, granted, I know what's going to happen because I've seen it happen before, but that's not the point of today's lesson. But what we're now expecting the market to do is make a lower low formation. That's how the market moves. Lower lows, lower highs, lower lows. So if you're looking for sales here, it's not wrong whatsoever. But what I want to identify in the market is a structural low. So we just want to make sure that we're managing our trades before price gets to this level so that we can get to break even just in case we do have a reversal. So let's take a look at what happens. We're expecting a lower low on this market, and let's see how price reacts. So prices come back down to this level here. Now, some people ask me, where do you draw your levels? On the bodies or the wicks? It really doesn't matter, guys. Understand that this is just a area in the market. There's not going to be a single level. Some people use whole numbers, some people use this and that, whatever. I don't care. The point is, I'm just trying to understand the market's behavior at this point in time, and if price is reacting off of this level, then I clearly know that this level is of some significance. So for that reason, it's just an area. So we're going to continue to look at this just with a single line, just to make this example clear to you. Now, once we get a reaction from this level, it doesn't mean that price is not going to break it, but this should deter you from selling into this level just in case the odds go against you. We want to be taking trades with the highest probable opportunities, and while price is reacting at this level, it's definitely not a high probability trade. So let's concentrate on this because this is the tip that I want to share with you today. Now, we're looking at this structure, and most people will say, well, it's reacting, now it's time to buy it, or they're going to wait for more confirmation to see some sort of bullish pressure, or they're going to see if price breaks through structure and breaks back into structure, or they're going to be looking for information like this, which is a pin bar. Now, throughout the whole process, everybody's trying to decide whether this is going to sell to the downside. You've got breakout traders, retest traders, lower high structural traders, whatever else it is. But how can we gather this information to the best of our ability and really understand what's happening? Well, we know this is a significant level because the market has clearly shown in the past when a structure makes a level in the market and it's not clear as to why it's made this level, and we've had a rally, or price has come back for that double top and made the rally, we know that usually it's price coming back to collect orders. So if we take that information and bring it over here, we can almost identify the same thing. Now, how do we find confluence in what we're saying? Well, here's a tip. What we can do is we can take the wick high of this structure, we can take the wick low of this structure, next we can take the body high of this structure. Now we can form our wick, and then we can take the body low of this structure, and now we can form our wick. And then what we can do here in this instance is we can draw in our body. Once we've drawn in our body, what we can then do is we can remove this information, which are these lines here. And how do we end this candle? Well, we bring this candle back to the close of the last candle, this one here, the body close, and then connect our wick. Now, if we look at this candle and the information that this candle has given us, what is this a sign of, or potentially a sign of? Because nothing's 100% concrete. Let me keep that clear. And this is a disclaimer to everybody. There's no 100% concrete, clear, holy grail trading strategy out there. Neither is what I'm teaching you now. But it's not about just waiting for one thing. It's about finding confluence. And that's what we're finding here. Strong push face market, lower high, failed to break the previous structure, an area where the market is reacting from a previous area. Remember this example here, and now we've gathered our data and we've collected into one candle. This is a strong bullish push to the downside, a fail to close with a strong bullish close to the upside. This is looking like a pin bar, as most people will say. So for that reason, is it safe to say that we could take this trade? Well, absolutely. We can take this trade at the close of that previous candle with an instant execution. We can place our stop loss below the previous level because now we have information that we may be entering a reversal. And what we need to check is if we can get to a break-even stage in this market when price gets back to this level. So if we do that, we need a 1-to-1, and as you can clearly see, we have a 1.45. So as long as we can get to break-even at 1-to-1, we're good to go. Now we'll go for a 1-to-3 target. We gathered all the information we need. We found our confluence. This is the one candle that we've gathered through all this information here, which is indicating there's more bullish pressure than there is bearish pressure. And then we take the trade. Now, as you can clearly see, the market's pushed to the upside. So at this stage, we want to lock this trade in at break even. And now at this point, it's whether it goes up or whether it goes down. It really doesn't matter, to be honest with you. But as you can clearly see, we finally hit take profit. So that's how we can solidify and find a strong level in the market, especially when the market is not giving us clear directional bias and giving us different behavioral patterns, whether it's bearish or bullish, indecisions, dojis, morning stars, shooting stars, I don't care, kangaroo, whatever. Okay, the point is we gathered that information, and that's what we got here. So let me show you another example that you can see where we can still collect this data, but it may not work. So we just looked at an example where this works. Now, I don't want people to question me and say, well, you're making this up because you're trying to find the best areas on the market to take these trades. Well, no. Let's show you another example. So here we have another beautiful double top area in the market. We can see price has created a level. We've had a movement from that level, and now we've had price come back failing to break that level. Now, in and around this level, we're seeing lots of pin bars, lots of bearish pressure, etc., etc. But let's gather the information that we need to really find out what the behavior of this market is. So how are we going to do this? We're going to take our wick high, we're going to take our wick low, we're going to take our body high, and we're going to take our body low. Then what we're going to do with this information is we're going to draw in our wick to the top, draw in our wick to the bottom, and then we're going to pop in the body. Now at first glance, this looks like a very nice candle to the downside, but remember, we must remove this line, this line, this line, and this line. And then we have to take this body to the close of the last candle. And then with that information, we join our wick. Now look at this candle. Does this look like this market is going down? Or does this market look like it's indecisive or potentially going up? Well, for sure, it's definitely not looking like it's going down. But anyway, we'll take the trade and let's see what happens. This is a candle close of this. We'll put our stop loss above structure and let's check that we get a 1-to-1 before price gets back to in and around this level. And we do, so we can secure our trade to break even. This is 1.68. Let's move this across and go for our 1-to-3 target. Again, this is an instant execution trade at a level in the market where price is reacting to. Looks like the market could be going down, but we've gathered our data here with this a cumulative wick, and let's see what happens. Ah, that's funny, isn't it? Well, I didn't make that up. This information told me. So can you see how we can use this to our advantage and how we could use this to our advantage? If we collect the data that we see from the mess that it looks like at a key level and we're not getting the information we need, then guess what we need to do? We need to let it go. Wait for price action to show a true directional bias if you collect this data and it looks like this, and then look to take the trade. We'll take a look at one more example in a situation where you don't need a key level, but you can use market structure to your advantage. For our final example, we're going to take a look at a trade where we don't have any key levels, but we can use market structure to our advantage. So we can clearly see this structure is more in a bearish structure than it is bullish. We can see our structural highs on this market, break of previous structural lows. We can see lower highs and we can see lower lows. So what we're anticipating at this moment in time is for price to eventually pull back to make a new lower high before a continuation to the downside. But what if I don't want to wait for that lower high and I want to take the exhaustion? How am I going to be able to gather that information? Well, pretty simple. Exactly how we just done it on the last two examples. One trade won with good evidence, one trade lost with good evidence, which we shouldn't have taken, but it was just an example. And then let's play this final one out. So I'm looking for evidence on this market to show that the market is starting to deplete in bearish pressure, because I need the exhaustion, but I don't need it. The market will need to exhaust eventually itself. And that's what I'm looking for. So here we have a daily candle close, strong bearish pressure to the downside first and foremost, and then bullish pressure close. Let's continue with this information. This is not enough to gather information for us to start looking for that pattern we're looking for in this information here, simply because we can clearly see this is still strong bearish to the downside. So I'm still waiting for this pullback to happen. I need more information. Now we have more information, which is bullish pressure to the upside. But look what's happened with this situation. We have now a strong push phase, so this could be the exhaustion. But what can I do in a situation like this? Can I still take the trade? Well, absolutely. But first we need to decide if it's going to be a good trade. So what we want to do is take the wick high of this area, the wick low of this area, and then we take the body high of this area, which is this information here, and then the body low of this area. Then what we want to do is we want to take our body and place it in this area. Technically I should have put my wicks in first, but it doesn't matter. Wicks in to the top, wicks in to the bottom, and let's clear this level here and make it a bit more pronounced along with the other one. A perfect alignment. Fine. So now let's remove this, let's remove this, let's remove this, and let's remove this, and let's bring this up to the close of that previous candle and then join our wick. Now, even though we don't have any information to the left to indicate that this is a strong level, what we've now taken into consideration is the phase of this market. So now I'm expecting an exhaustion phase, but the market has pushed and exhausted quite a bit already, but we still don't have any significant evidence that the lower high has been formed. So what can we do in a situation where we take a trade like this and our stop loss is going to be too big? Think about it. What could we do? Well, we could sacrifice 1R to then go for a 2R trade. There's no reason why we can't do that. What we're focusing on is management. So as long as we can get to break even at this point, which should be a 1-to-1, which we can clearly see if we bring this down here, we can, then the trade is good to go. So we know we're entering with a bigger stop loss than usual. So what we can do is go for a 1-to-2. Now looking at this area in the market, we can see that price is in a push phase, expecting an exhaustion. We collected the data, and now look what we have, a strong bullish pin bar candle to the upside. So let's take the trade, see what happens. The market continues to go in our direction. We want to lock this trade in at break even now by the time price gets back to 1-to-1 and comes to levels in the market where price is not going to be able to break easily, and then we'll continue to see what happens. And as you can see, we end up winning that trade. So I hope this information was useful to you. Collecting data at these key levels in the market, whether it be a market structure trade where you're looking for exhaustions and continuations with no key levels, or you're looking for levels in the market where prices reacted to before, you can collect that data and you can really figure out for yourself what is the best trade to be taken at this moment in time. I hope this was helpful. Let me know what you think in the comments, and as always say, smash that like button for me guys, subscribe, and until next time, take care.